Hi there, Scott Meyers here, CIO, Chief Investment Officer of PassiveStorageInvesting.com, representing the TriCore group of funds. And what I want to share with you today is, well, one of the many reasons why we love self-storage investing, both actively and passively in this incredible industry. And that is because of the depreciation that can be generated from our investments in self-storage. So not only are most of the components and most of the items able to depreciate, but also at an accelerated level. Every time we purchase a facility, we do what's called a cost segregation study, and we have the engineers come and really literally break down the parts of each and every one of our acquisitions or our developments to determine what can be depreciated and how quickly we can depreciate them. And the beauty of self-storage is that compared to the other asset classes like multifamily and single family and other types of assisted living facilities and mobile home parks, we can depreciate. Our engineers have found that we can depreciate up to 80% of the buildings within our self-storage projects, as compared to right around 50 to 40% or so in comparison to the other asset classes. And so with that, combined with the fact that when investors invest with us, what we've done, which is a little unique and different than most folks, is that we will separate our shares. We will bifurcate the shares between our investors, our passive investors that are investing out of, say, a self-directed vehicle, an IRA or a real estate 401k, where when the money, their distributions and their profits come back, they don't get the tax benefits. They can't depreciate that, versus our investors that are coming in with cash that can use that depreciation and send it directly down to their bottom line. Well, those equity partners, all investors in our projects are getting a share of and sharing the ownership of the facility. But when it comes to the depreciation at the end of the year, with regards to tax returns and our K1s, only those that are investing outside of a self-directed IRA vehicle are getting that depreciation. So what we do is we funnel all of that depreciation to those folks, those shareholders that can actually take it. And most syndicators out there will just blindly send it back, a K1 with a share of the depreciation for all of their investors, whereas we understand, we know the needs of our customers, and we've heard them, and we've learned that if we can funnel all of that depreciation, which is not that difficult to do, to those folks, well, then they benefit more. And so if that is you, if you're looking to take advantage of some depreciation, if you're seeking depreciation, well then, A, you should be investing in self-storage because it is the asset class that can be depreciated the highest amount. And B, we would just invite you to take a look at what we're doing and investing with us, because we funnel all of that back to those folks that can actually take that depreciation. So if you click on the link below or the information down below, you will get access to our portal and all of the information on our upcoming project in Westerville. You're seeing some of the information on the sheet right now, but you can dig in a little bit deeper to look at not only the intricacies of the project, our projections and our returns, which are substantial and in many cases higher than most of our competing syndicators and sponsors out there in the marketplace, but also you can pay particular attention to our cost segregation study from Madison Specs, and that will be listed in there as well, so that you can calculate and roughly project the amount of depreciation that you would be able to take in our projects as well. So that, combined with the fact that this asset class is very recession resistant, it is the asset class to be investing in, not only when times are good in our economy, but also as we head into a recession. It is very resistant, as well as our stellar track record, returning over 36% internal rate of return over the past 15 years on average to our investors through multiple recessions and different economic cycles. So we would love to have you come alongside of us and join us for all those reasons. But for those that are specifically looking for depreciation, we feel that this is an asset and a project in Westerville, Ohio, that you absolutely should be looking